In this video, I'm going to explain to you by far the number one best Forex risk management trading strategy that is available. And this is probably one of my biggest discoveries in the past couple years when it comes to Forex trading. And I actually learned it from the guy that wrote this really good book called Naked Forex. And by the end of this video, in the next 10 minutes, you're going to have an idea about this little known concept that not many people are really aware of called asymmetric compounding. And you'll be able to use the exact same trading strategy that you're already using. And if you just simply add this asymmetric compounding money management strategy on top of it, it'll literally make you 2 to 3 times more profitable. And I know that's kind of hard to believe with something as small as a money management strategy, but trust me, I'm going to explain exactly how it works, and I'm going to give you examples and show you proof that if you just simply use this risk management strategy, you'll be 2 to 3 times more profitable on average. Hey, my name's Adam Winnig, and we created this channel to help make your trading easy, lucrative, and fun. And if you have not yet joined our free Facebook group, please go on over to group.bluedgefx.com to become a member there. It's completely free and it's insanely valuable. Trust me. So we're going to be talking about this concept called asymmetric compounding, and I may have misspelled it. I don't know how to spell asymmetric. I forgot, but bear with me here. Now, I first learned about this again when I read this book called Naked Forex. I can't remember the guy's name that wrote it, but I learned about this strategy when I took one of his courses, and it was absolutely brilliant. It blew my mind of how just changing the way that you manage your risk can make you, 2 or 3 times more profitable. So how does this actually work? It's actually pretty simple. And I'll tell you this, that once I caught this and I caught wind of how powerful this was, we started teaching it to our group of traders as well. And we literally had people passing prop firm challenges, getting funded, people making crazy money as soon as they understood this simple strategy. So this is really powerful. So pay attention here, okay? So let me show you how asymmetric compounding works here. Let's say, for example, that we are using a 1 to 3 risk to reward ratio with our trades. And you could say that, we're risking 1% in order to make 3%, right? With asymmetric compounding, what we're going to do is essentially we're going to take our R, which is our risk, right? And we're going to simply compound it with our earnings. So what does that mean? That means, for example, if I risk 1, percent, and I win, then I win 3%, right? Because a 1 to 3 risk to reward ratio. Now, if I risk 1 and I make it, on the second trade after a winning trade, we're going to risk our winnings plus our original R, so for a total of 4%, and we're still going to use a 1 to 3 risk to reward ratio. However, now if we win this trade, now we're going to earn 12%, okay? Now, let me show you why this is so freaking powerful, okay? So, let's just use this example for example. I risk 1% to make 3%. Let's say that I lose this trade, okay? This was a loss. Let's say that I lose it, then I'm going to continue to risk 1% in order to make 3%. Okay, and if I lose this one, then I'm down what? I was down 1% after the first loss. Now I'm down a total of 2% for the second loss. Let's say that my third trade, I risk 1 in order to make 3%, right? At this time I win, okay? So I actually get a winner. So I get a winner here. This means that I win 3%, so the account is positive 1%, right? Well, the very next trade, what am I doing? I'm risking the original amount, 1%, plus my winnings from the winning trade, and I am going to risk 4% in order to make 12%, okay? Now, if I win this trade, now my account is up 13%, okay? So I'm compounding on winning trades, both my original R plus my winnings, 3%, okay? And simply doing this will make you significantly more profitable. I'm going to show you and prove it to you in just a second, okay? Now, the whole name of this game is to simply win 2 trades, 2 wins in a row. That's the name of the game. If you can win 2 trades in a row, then this strategy becomes insanely powerful, okay? And how likely are you to win 2 trades in a row with a 1 to 3 risk to reward ratio? Well, if you think about when you play a dice game, for example, right? There's 6 sides on a dice. anytime that you roll doubles, you basically have a 1 out of 6 probability and a 1 out of 6 probability here. So you know how often when you're playing dice games, you roll doubles, you're more likely to actually win 2 trades in a row at a 1 to 3 risk to reward ratio than you are at a 1 to 6 risk to reward ratio. Okay, so let me bring this all home. Let me show you how this actually works out with numbers. So what we're gonna do is we're gonna use a Monte Carlo simulator. And basically what that is it is a calculator, which is gonna do all these fancy simulations in the background. And this is how they predict like if you've ever seen them predict like hurricanes or weather patterns. They basically do all these simulations of potential paths. Like if you've seen like the spaghetti lines, right? When a hurricane's coming in, it's like they have these 5 different lines that it's going up, right? It could go here, it could go here, it could go here. This is a Monte Carlo simulation in a sense, which you're basically taking all of the possibilities of all the probable outcomes and you're mapping them. So here's the calculation, right? So let's say we're trading a $100,000 trading account. And let's say our trading system has a 40% win rate, okay? With an average risk of 1 and an average reward of 3, okay? Again, a 1 to 3 risk to reward ratio. And by the way, this whole thing, you can use this as also with a 1 to 2 risk to reward ratio the same way. You just basically, if you earn 1% and if you risk 1% and you make 2%, then you take your winnings plus your original R. So again, we're risking 3. And if we win that, then we are going to earn 6%. So you can do this with a 1 to 2 risk to reward ratio as well. And it'll also be powerful. So let's explain this. $100,000, 40% win rate. We risk 1 in order to make 3. And our risk is 1%. So we're risking 1% to make 3%. We do a sample size of 100 trades. And let's check out how this works out. Okay. So we can see here, for example, it was just slightly more profitable. The regular compounding balance, had you just risked 1% each trade, would have been about 125,000. Asymmetric compounding would have been about 133,000. Okay, let's see this again. Okay, and here you can see that you would have made 100,000 extra dollars simply by using asymmetric compounding. Again, we'll do another simulation here. Let's see what happens. Here you would have basically more than doubled your profitability simply by using asymmetric compounding. That's why this thing is so powerful. You'll see it's rarely less profitable, and a lot of the times it's significantly more profitable. We'll do another randomization here. You can see that we made an extra nearly $100,000 simply by changing our money management strategy and changing nothing to what we're actually doing in the trading scenario, just changing how we manage risk. Here again, you would have made $193,000 versus $350,000. So pretty powerful, right? Hey, if you thought this was powerful and you need a strategy to find 1 to 2 or 1 to 3 risk to reward ratios, then come on over to bluedgeforex.com/VRT and download our free volume reaction trading cheat sheet. This is our favorite trading strategy, all broken down into a simple little cheat sheet. This is something that was taught to me by a friend of mine that's a 15-time funded professional prop trader. He's one of the most consistent traders on the planet. So once again, go to bluedgeforex.com/VRT to get your hands on this for free.